afternoon. This is Nader Goudarzi, Blue Cedar Capital, 8th of March 2022. I'd like to speak to you about the conflagration that has taken place in Ukraine and of course the fallout vis-a-vis the financial markets. I have rarely seen, in fact I have never seen such a global confrontation as this one, because at the end of the day what is happening in Ukraine is affecting the price of energy, which has skyrocketed. Oil prices currently are trading at around $130 per barrel. I mean, if the Russians decide to cut off the supply of oil to the world, the oil price could indeed go to $300 per barrel. This is what some of the experts have been saying. The price of nickel today doubled to $100,000 a ton after an extraordinary amount of short covering. The London Metals Exchange has been closed. So we're seeing a supply shock in the supply of raw commodities, supply of metals, supply of precious metals. Also the wheat prices are skyrocketing. Ukraine produces 30% of the wheat of the world. We are facing potentially a recession in the world because the increased prices of all these basic materials will mean that the profitability of companies will be mitigated and they will not be able to pass these increased prices on directly to their consumers. The expected rate of inflation will increase, and expectation in inflation is a key to the level of inflation going forward. All of this, in my view, would mean an equity market that will be very volatile. The Federal Reserve has an additional issue to deal with, and that is what to do with interest rates. I suspect that they will continue to raise their interest rates by 1/4 of a point for probably 4 times this year. They may mitigate that, but certainly that is the direction of interest rates, albeit to perhaps lesser levels. So the world is in a very, really in an extraordinary position right now. I'm not really trying to scaremonger, but trying to set out what the consequences of the current situation going forward will be. Where are the best places to be in this environment? Clearly, assets that will benefit from the situation, energy prices reflected in higher prices for oil stocks. The price of gold, although has gone over $2,000 an ounce, is probably going to go much higher, as it has not performed for the last 2 years, except for the movement during the last 3 to 4 weeks. It's very difficult to put a price target, but certainly 10% or 15% upside on gold is very reasonable, and even more is also potentially possible. The other asset classes that could be of interest, maybe some of the defense companies. Obviously, I would also be seeking out investments that have completely lost their value and come down sharply in price. There are many in the marketplace. So as we speak, volatility will continue. I don't think that we have a situation currently where investors have essentially given up, because the VIX index, although yesterday was up, it wasn't up sufficiently to suggest that the market has given up. At that point, obviously, it could be an interesting buying point, entry point. Very difficult to know where to start buying, but certainly quality assets should be on the list. Of course, with inflation, cash will lose its value, but nevertheless, a certain amount of cash will always be very prudent. And a balanced portfolio goes without saying. Really, I think that this military standoff with the West, I don't want to give my view on who's at fault and who's not at fault, but certainly the military standoff is something that is going to continue. This is not something that has just happened overnight. It's been building up for decades. Thank you for listening, and I will hope to speak to you soon.